Welcome to HORT2307, Business Principles for Sustainable Urban Agriculture. Today we're going to talk about structuring your business. There are many things to consider before you decide on a structure for your business. First of all, how simple do you want your business to be? Do you want it to be a sole proprietorship where you make all the decisions and you're solely responsible? Are you going to form a partnership where you have multiple people that are interested in starting a business together? Or are you going to be a little bit larger and want to go to a corporation? One of the deciding factors is going to be flexibility. How flexible do you need in this business structure? How much does it cost to decide on this business structure and get your business going? Do you need protection from personal liability? How much control do you want of the business? And taxes, how you're going to deal with taxes in establishing the business, running the business, and possibly in the future ending the business. The most important part for deciding what structure your business is going to take are planning the tax and legal structure. There are several different business structures available. Sole proprietorship is one, and that's where you are the owner and the runner of the business. Partnership, of course, where multiple people start a business together. You can form as a corporation, whether you're a single person or multiple people, and then limited liability company is another option. So sole proprietorship is like it sounds. It's fairly simple to form. You are the owner and the business, and you are considered one and the same. Your business taxes for a sole proprietorship are going to be filed with your personal taxes. There is typically no filing fee or annual report fee with the Secretary of State if you're running a sole proprietorship. If you decide to start a business and want to run it under a catchy name or a name other than your first and last name, you may need to file a DBA or a doing business as announcement. This may have a filing fee associated with it, and you would file that with the county clerk as a DBA filing. You'll have to publish your intention to operate this business under an assumed name in the newspaper for 3 consecutive weeks, and you may be required to have your DBA information notarized. This is what a sample DBA notice looks like. This actually came out of the newspaper in 2017. So this person, Cornelio Rodriguez, is going to start a business called CR Painting and More, and this DBA notice lists his name as well as the address the business will be run out of, and then this is published in the paper for several weeks. And as you can see at the bottom, there was actually a notary seal required on this, and they have the notary's information in here as well. So let's talk about sole proprietorship. Like any business structure, it has its benefits and its drawbacks. Some of the benefits for running a sole proprietorship is you get to make all the decisions. You are the owner of the business, and you can control the direction of the business and all decisions surrounding that business. For example, if you want to start a lawn care company and then later on the line decide to add design, you can decide to make those you can make those decisions on your own. You don't have to consult with partners or anything else. It's all what you want to do with it. The taxes for the business are paid through your personal income tax, and any income that you make from the business you have to pay taxes on through your personal taxes. As I stated earlier, there are drawbacks and benefits to each business type. The drawbacks for sole proprietorship include you get to make all the decisions. Sometimes decisions can be difficult to make, and you would like to just foster those or foist those over onto somebody else to make, but As a sole proprietorship, you make all the decisions. You are also personally responsible for the liabilities of the business. So if you go into, as a lawn maintenance person, go into somebody's yard and you accidentally kill all of their vegetation, you are personally responsible for replacing that. If they decide to sue you, you are personally responsible for all of that. If the business closes and owes debts, you are again responsible for paying those debts off. And if you get into a liability situation, insurance may not be enough to protect you, meaning they can sue you and take your house and your car and whatever other assets you own. Those are, because you and the business are one and the same, you could very well lose your house and your car or any other assets you own. Partnerships, another type of business structure that we're going to look at. This is similarly simple and cheap like a sole proprietorship. Tax liability passes through to owner's tax returns. So, in other words, any taxes owed by the business are paid when you file your taxes. You would register an assumed name with the county clerk, and there is actually no legal entity formed in a partnership like there is in a corporation. Both owners, or however many owners in this partnership, are authorized to act on behalf of the business. And all partnership owners are responsible for all liabilities of the business, including ones taken on by a single partner. So what that means is if you have a partner that you formed a business with and they get into trouble when they're out acting under the business, the person can sue that partner as well as any additional partners and go after any of their assets. So it's very important to consider those risks when you take on this partnership. If a partner leaves, depending on how things are written, the partnership may dissolve. And partnership shares are not freely transferable, so you can't just gift your partnership to somebody else. Before entering a partnership, you need to be very sure that you share common goals, both big and small. How big do you want the business to go? What direction you think the business will be going in the future? If you're going to run your business, since this is urban agriculture, if you're going to be organic, if you're going to grow conventional, you need to define pretty much as many goals as you possibly can and make sure you're clear and you have the same goals going forward, or it could be a problem in the future. You want to make sure you put everything on paper and develop a common vision, mission, values, strategy, tactics, and a game plan. In other words, you don't want to leave anything to chance when you're in a partnership. You want to be aware of each other's strengths and weaknesses. One partner may be really good at sales and marketing. Another partner may be really good behind the scenes running the business day to day. Know what your each other's strengths and weaknesses are so that you can exploit them to the best advantage for your business. Make sure your roles in the business are clear and clearly stated. I'm going to do the grunt work. I'm going to be out there mowing the lawn and in a lawn care business and taking care of the perennials, while my partner is going to be doing all the marketing and the sales and the bookwork. And make sure you divide up tasks fairly based on each partner's strengths. And another absolute must is that you must know how to resolve conflicts, differences of opinion. If you are unable to resolve conflicts, then your partnership could dissolve. and decide on what percentage of ownership each partner is going to have. If you have one person coming in that only wants to do a quarter of the work, then their partnership piece is going to be 25%, while the next person is going to be, their partner is going to be 75%. 50-50 split may not be ideal for a partnership, for a two-person partnership, as you may really need someone to have the final say, the final decision-making say in a conflict. And then you want to make sure you put all these decisions and all these definitions, the vision, the mission statement, the values, into a legal document, so that if you ever end up with unresolved conflict, it's all spelled out how it will be resolved and how you're going to move forward. Another type of partnership is a limited liability partnership. This actually reduces exposure of certain partners to unlimited personal liability by creating two classes of partners. For example, if you have a partner that's only invested some capital and that was the only thing they were going to do is invest some money into the business, then their liability may be limited if the other partner causes damage and is sued. The two classes of partners will help differentiate that. General partners, these remain personally liable for business. As I stated, if somebody sues the business, these general partners then could lose their assets. Another way to get around the liability issue is you can incorporate so that no individual is personally liable for the business. Limited partners, there's no personal liability for the entire business. If limited partner is a manager, they may be liable for debt. Limited partners can leave the business without having to dissolve the partnership. So if you have a person who has put, say, some capital down, some money into the business to get it started, with the idea that in 2 years they'll take their money plus their a little bit of interest, they would be considered a limited partner because they will leave the business without causing the partnership to dissolve. LLPs, limited liability partnerships, must be filed with state and require filing fees and annual fees. The next one we're going to talk about is corporations. These corporations are considered legal entities with laws, rules, and guidelines to follow. Incorporating must be done according to state law. It does require paperwork and fees to incorporate initially, and then you'll get a corporate certificate that must be filed annually. Franchise taxes are paid annually, and you must hold annual shareholder meetings. You may need to register as a foreign corporation in other states where you want to do business. So here in Illinois, where we have Wisconsin and Indiana so close, you may need to register with Indiana and Wisconsin as a foreign corporation if you want to do business in those states. It's advisable to get a corporate seal for your documents, and you may not have the same name as another business incorporated in the state. So that is a legal search that will have to be done once you decide on your business name. If you want to become a corporation, you'll have to do a search to make sure that no other business in the state holds that corporate name. With corporations, owners are shareholders, and they finance the corporation by purchasing stock. Shareholders elect a board of directors which are responsible for day-to-day operations, and the board of directors designate officers. A corporation is a separate legal entity from shareholders. That means that if you form a corporation and you have some type of legal issue, the owner's personal assets are actually protected from business debts and liabilities. So if you have a customer that decides to sue you, say you're running a small urban farm, you've incorporated, and somebody gets sick eating some of your produce, they can sue the corporation, but you can't. The owners of that corporation will not lose their personal assets. Shareholders can leave the corporation without having to dissolve the business, and it can be easier to obtain funding as a corporation. Once incorporated, then you pay yourself a salary or other compensation as a way to make your income. And it's very important that you do as much as possible to demonstrate that your corporation is not a shadow company, and you do that by separating business and personal accounts. If you incorporate, you will have a checking account or credit cards all set up in the corporation name. You will never use your personal and your corporate accounts interchangeably. If you go somewhere and you're doing something as personal business, you would use only your personal accounts. If you're doing something for the corporation or for the business, then you would use the corporate accounts. If you get into a situation where you start blurring the line between personal and corporation, you could very easily be liable, and there are laws against that. So don't do it. You need to make sure you have a very strict line between your personal business, your personal credit, your personal checking account, and your corporate accounts. There are some drawbacks if you're going to form a corporation, of course. And one of those is the paperwork and formalities. If you're going to form a corporation, you're going to have to create articles of incorporation. You're going to have to issue stock. You're going to have an election for boards and for board members and officers. And you have to have an annual meeting with formal meeting minutes. Another drawback is it could be seen as double taxation. The corporation pays taxes on its profits, and then shareholders have to pay income taxes when they receive their dividends. The cost to start a corporation is $281.25. It's a $150 filing fee, a $25 franchise tax fee. If you want to expedite, you've decided you want to start a business and you need to do it now, there's a fee for expediting this corporate filing, and that's $100, and $6.25 for payment processing fee. Be aware that these fees can pretty much change at any time, depending on what decisions the states make on how much their fees are. And then you have an annual report that you have to file, and there's typically a $75 annual report filing fee. So those were some basic information on corporation. There are subtypes of corporations, or subchapter S, so an S Corp. This is considered a small business corporation. And you cannot have more than 100 shareholders and one class of stock. If you end up going over 100 shareholders, then you have to reclassify your corporation. You can't be an S corporation. Corporate profits and losses for an S Corp pass directly to shareholders and are taxed as personal income. One of the benefits of an S Corp is that you can then protect your personal assets from liability. So they can't come after your house and your cars or any other personal assets. They would sue the corporation whatever assets the corporation holds can be seized, but your own personal assets will not be touched. Stock is closely held by a few individuals, whoever is in the corporation. And an S-Corp will help you avoid some of the formalities of a corporation by permitting shareholder agreements and operation without a board of directors. So you won't have to define a board of directors or appoint a board of directors with an S-Corp. And losses of a corporation are not allowed to flow through to personal taxes. So if your business, your S-Corp is losing money, you cannot take that as a deduction on your personal taxes. And with an S-Corp, you will be required to file both your S-Corp taxes and personal taxes. Another business structure is limited liability company, or LLC. This one is simple to start and is flexible. The owners of an LLC are called members, and they are actually protected from unlimited personal liability, provided they can prove that they've followed best business practices and done everything they could to reduce their exposure to liability. This is a pass-through entity, so members in an LLC account for profits and losses on personal taxes. If you remember, the S-Corp, you couldn't take losses on your personal income taxes. With an LLC, both the profits and losses come off on your personal taxes. There are no requirements in an LLC for formal meetings, elected boards, or officers. And as with everything, there are drawbacks to an LLC. The cost to start a limited liability company can be $600 to start it, a $500 filing fee, and then if you want to expedite the filing, it's another $100 fee. And you'll have to do a 250 annual report filing. We're going to talk about nonprofit corporations next. These are organized to do charity, education, religious, literary, or scientific work. So if you want to start an urban farm and your goal is to study scientifically how soil's impacted, how insects are impacted, what's the impact on the bees and the birds, you can actually start a nonprofit for that. The work benefits the public, so this nonprofit corporation can receive the tax exempt status, where then you will not be required to pay state or federal taxes on profits. You must file with the IRS to get that tax exemption, and you follow rules similar to the regular C Corp, but then there are special rules that you need to follow with what you can do with any profits. So any profits in a nonprofit corporation cannot be distributed to members of the nonprofit or to political campaigns. If you do form a nonprofit, you will be referred to as a 501c3, and that refers to the IRS code commonly used to grant tax exempt status. This is a short chart to compare the different business structures. If you look, the business structure is listed on the left. The ownership, who owns the business, is in the next column. And the last two are probably the most important: liability and taxes. So if you look for a limited liability corporate company, LLC, you can see the owners are not personally liable. They would pay self-employment taxes and personal tax or corporate tax, depending on the size. Then you have like the S Corp there, which owners are not personally liable, and any profits and losses go through to their personal taxes. The C Corp and the B Corp, those two are paying, the owners are not personally liable for any corporate damages, but they would pay taxes at the corporate tax rate. So this is just a quick chart to kind of give you an idea of where you would fall. If you are wanting to start a business and you have a lot of personal assets, probably sole proprietorship is not the way to go if you are concerned at all about liability. You might be better off going the LLC route. If you're going to do a not-for-profit, of course, that's completely different than sole proprietorship or LLC. So we looked at the different structures. How do we choose which is the best for us to get started in our business? Well, you're going to have to look at the balance of, is it simple? How flexible is it? What's the cost to get started? Is it going to cost me several $100s to get this business off the ground just in filing fees and paperwork? And then, as I stated, if you have a lot of personal assets, some type of liability protection may be in order. If you have no personal assets, where you're bootstrapping something, then liability protection may not be important. You're going to need to think about the business creation, maintenance, and continuity. How are you going to create the business? How are you going to maintain it? And how long do you want to see it last? Is it something that you want to see, that you see lasting your entire lifetime for 50 more years? Or is it something that you see as a non-for-profit, for example, that only needs to be around for 10 years and then the need will no longer be there? These are things you have to think about. It's always a good idea to seek professional legal and accounting counsel, and make sure you do your research, your due diligence. Go and talk to, if you're wanting to start a not-for-profit, go and talk to other non-profit organizations and find out what their mistakes were and what they would think they should have done differently and what did they do right, so that you do not make the same mistakes. Some additional information on business structure. You can change your taxable year. So for the average American, our tax year, personal tax year, runs January 1st to December 31st. If you're starting a business, depending on which business structure you select, especially corporations, you do not need to have your business tax year start on January 1st. You may start your business tax year June 1st, and then your business would run from June 1st to May 31st. It's one of the things that you can set up depending on which business structure you choose. Find out what other farms are using. If you're going to start a small farm, find out what they're using. Many of the small farms that are set up as sole proprietorships, partnerships, or LLCs. As I stated, if you don't have a lot of assets and you are just bootstrapping your small farm, then sole proprietorship might work for you. As you build up assets, then you may then want to move to an LLC. It just depends on what your situation is. Some references for you. Farmcommons.org is an organization that will help you with business questions. The Illinois Direct Farm Business, directfarmbusiness.org is another one. Secretary of State Business Services, this is in Illinois only. If you're going to go to another state, you would have to look at their Secretary of State and find out what their business requirements are. And then the Small Business Association, this is the chart that I posted in this lecture.